yesterday at the state courthouse. That was kind of awesome. And even though I may not have made a whole lot of money for my students yesterday, I think I may have made a little bit of money for a sweet old lady yesterday. Sweet older lady, I should say. Because I'm pretty sure my testimony is what put her over the top. I'm not for sure. I didn't stick around to hear any, I'm sure it's probably still ongoing today, but I'm pretty sure that I helped her out quite a bit. Anyway, enough of that. Let's go ahead and share my screen. And down to business as usual. Good morning, Mr. Nick. Hope you're doing well. All right. I think you can kind of tell by the way things are unfolding this morning that the markets just might be waiting for something. And this couldn't be more true than today. Other than Aussie, which had a big fall overnight, I was looking at Forex Factory here. And I believe that was their CPI data that came out. Came out awful at like negative 0.2. That was really bad news for Aussie. I knew it was an inflationary number that came out, so that drove Aussie down about 150 points on the Aussie to the downside here. Looking at the market in general, though, you can kind of tell by the way the markets have moved so far. Really just a lot of consolidation on the euro, consolidation here on the Swiss, consolidation here on the pound, consolidation on the yen. We have last 5 or 6 hours, we've had consolidation on the CAD, even though oil's been up. Big mover was Aussie, obviously, but the CPI numbers. But I think what the market's mainly anticipating today is the FOMC announcement that's coming up here this afternoon at 2 o'clock. We will be meeting for that. Class starts at 1:45 p.m. Eastern Time. Up until that point, I do have one idea, just one today as far as a trading scenario. I'll get to that here in just a second because I want to talk about some things first. We'll talk about some of the trades from overnight, but we'll get into kind of the trade scenario. I think the only way to really look at the trade scenario for today is to look at potential for dollar strength. In fact, the only thing that I would look for with the Fed announcement is a dollar strength trade heading into it. After doing some more research overnight, in fact, I'm a little tired because I read so many things on like Bloomberg and then Market Watch and a couple of different other news publications and kind of getting my bearings straight on what I was anticipating from yesterday of what I think I could happen today. It's really anybody's guess as far as what the verbiage would be, but I have my own personal guess as far as what I think could happen. But with that being said, let's get in some trades from yesterday just to kind of show you a little bit of where we've been. One of the big trades from yesterday was here on pound dollar. We were looking for a short position if it went down below the 4,600 level. Some of you might actually still be in this trade. I did put a sell in. I got in a little bit late on this uptick right in through here, and I put my stop 50 pips away. So it was right up in here. It wasn't above the high. It was right up in here. Overnight, I actually moved my stop to break even, which was right up above kind of this little 3-bar reversal, if you will, 1 and then 2, 3. Had a little bit of a 3-bar reversal occur here, and I actually just moved my stop to break even. So I got break evened out a pound. If you're still in that, that's not a bad trade to be in. I'm not going to go into it now. I'm not going to try to short the pound, although I think that it is a good opportunity at its current levels. If you are currently short on the pound, I still think it has a shot at coming down to the lower edge of 4,500. But I already took my profit, or it was a small profit. It was like I ended up getting stopped out for like a half pip gain or whatnot. that's a break-even trade. I always say that I was profitable on a trade, and even though I was profitable by like, a fractional pip, that's still a break-even trade. You don't really count that as a winner. You don't count it as a loser. It's break-even. CAD yen was one that we went long yesterday. We actually went long as it started making higher highs in through here. It was looking really good. We put this one in for a 1 to 1.5 risk reward. In fact, I just got stopped out of this one right before class. This was actually a pretty nice winner because we went long. I had a trigger order in for when it broke this high, so I went long right in through here. It went up overnight. I actually moved. I moved my stop to break even at this point. Right in through here, I had it at break even. It almost came down and stopped me out because I had my break even point was actually right down in here. When it got up to here, because it was well into the almost to that 1 to 1.5, I put my stop right below this low, and just before class I got stopped out on that. So I ended up making it was like 35 pips right in here on this breakdown when I got stopped out. So the point is that I didn't manage the risk on it, and even though it wasn't a full profitability trade, could have hit a 1 to 1 risk reward there, but we were looking for a little bit more. We were looking for a 1 to 1.5 risk reward. So I believe the stop out value that I had on there was actually closer to a 1. It was almost at a 1 to 1 risk reward because we were only risking like 40 pips, and I ended up making like 35 on the trade. So it wasn't a horrible trade, just a little bit under 1 to 1 risk reward. So we're going to focus our attention though today on dollar. We'll change this over to, actually we're going to change this one over to euro dollar so we can kind of look at all the dollar pairs. And you can kind of see right now the dollar's in consolidation mode, and it depends on what pair that you want to trade here, but I'll give you my thoughts on the FOMC announcement and what I kind of believe will happen. Global markets are mixed, but not, nothing's up or down by that much. If you were to go through all the global markets here, you see the U.S. futures are down slightly. Actually, NASDAQ futures are down 1%. There's probably a big tech stock in there, maybe announced earnings or, oh yeah, Apple. You can see Asia was down just slightly. Europe up slightly, and then the U.S. down slightly. Oil's up almost 2%. I kind of thought with the CAD would have had some would have made more headway with oil being up 2%, but it didn't. It did make a little bit of headway. We were really accurate on this one yesterday because right when that CAD yen executed, the dollar CAD started breaking into lower lows. Dollar yen, as we all know, didn't really move that much in any direction, so that brought our CAD yen trade up substantially. Anyway, on to the dollar right now and the FOMC announcement. Here's the link. I'll go ahead and put that in the chat room to where you can register for it. Let me go ahead and put that in the chat room. There we go. So you can register for the FOMC, which will be trading at 1:45 p.m. Eastern time. I know it's pure speculation here, but there's no probability of a rate hike. In fact, you would almost look at the April meeting as being part one of the June meeting, because if you looked at the last Fed meeting, the last meeting was extremely dovish. I've kind of gone on and on about Yellen and kind of some of the verbiage that she used, not just in the statement, but also in her press conference, to where it wasn't just dovish, it was kind of pessimistic, like a downer, if you will. And in this meeting, I'm not saying they're going to raise rates in June, but I think in this meeting, they're at the very least, they're going to keep the option open, essentially. So they're going to open the door for a possibility of a June rate hike. Now, that doesn't mean they're going to raise rates in June, but I think that the Fed, with a little bit of the strength that we've seen in the global economies. Everything's kind of, and with labor numbers being good and everything really starting to come back into the black, if you will, from a global economic standpoint. Just from the markets have become a little bit less volatile. Oil is up. So inflation is kind of has stabilized, if you will, to where it's not overly aggressive inflation, but we have had some inflationary numbers. They're going to change their stance from being more dovish to they're probably going to be more optimistic or hawkish in the statement, to kind of signal to the market that, hey, we're not saying we're going to raise rates in June, but we're going to leave the possibility open for raising rates in June. Should we see more stabilization in the global economy? Should we continue to see good labor numbers? If we see inflation numbers start to come up into more acceptable levels, then yes, we could possibly raise rates in June. Now, just so you know, they're still going to stick with the whole data dependency thing. What they're probably going to do, though, is they're going to take a little bit more of their dovish language out of the statement to make it more neutral to hawkish, which I think all these scenarios kind of favor dollar strength. So I think if you had to speculate today, moving into the Fed meeting, yesterday I said that most of the market may be expecting the Fed to be more dovish, and I'm kind of going to correct myself on that after kind of reading more stories. It seems like the overall consensus might actually be a little bit more built into the expectation that I have, but that still does not mean that just because it's expected that it won't happen. As far as dollar strength, you got to like the consolidation that's occurred on a lot of these dollar currencies, and what we're going to do is we're kind of do a one cancels other order here. There's only two that I want to focus on here. I'm going to kind of put the pound because to the wayside here. I'm going to put it off to the side, because there's only two that I'm really looking at here for potential for trade opportunities, and that would be on euro dollar or dollar Swiss, essentially looking at more of a whichever one happens first type of mentality, and looking for a breakout scenario on either one of these currency pairs. I know that I know this is extremely consolidated. It would be pure, this would be a speculative position. But the one thing that I want to mention here is that this is also a position that I think we could hold if we get the proper circumstances, that I think we could hold through the meeting if we can get a little bit of dollar strength buildup on these pairs. And I'll show you what I mean here in just a second. Now I know, these don't look perfect just because you would like to see these things breaking down. Dollar's been overly weak from a liquidity provider standpoint also. So I'm certainly being more of a counter trend trader here, without a doubt. Here's how consolidated the dollar Swiss has been. You can almost see the semblance of just like a pennant. More, this is really just a pennant formation. You got an ascending, you got a uptrend line meeting up with a downtrend line. So you got these trend lines kind of converging in here, and all of this indecision right in through here. Euro dollar's been a little bit stronger at times, more so than the Swiss. Key level on this one would be right down in here at this 112.904 level. The only potential trade that I would like to be in going into the afternoon would be certainly on dollar strength. And if you don't get a trade, then I would probably not trade anything as we head into the FOMC announcement this afternoon. So our trade opportunities, if you will, are going to come. A breakdown here, you can kind of see that the reason why I'm using this as a low is the fact that you had a small little trend line that had formed in here. This is really more of a sideways pattern, but if I can get a breakdown through this 112.90 level right down in here, then I would like to do a sell entry. If you're using PitView, it's already been at a +5. I think all it would have to do if it closes beneath that level, if you see it going negative, I think that would be just fine. And then on the dollar Swiss, probably can see where I'm going here. These things have already been negative. It's, you know, dollar Swiss has already gone positive. I'll explain my thought process here, because both these trades I think have the potential for turning into news trades. The stop on the Swiss and the euro, obviously the stops are going to be swing high, and then on the Swiss, stop would be, we'll put it below this swing low, the second bounce off the trend line right in through here. So that would be 0.97105. These things may stay at these present levles. You know, these things may stay like extremely consolidated, you know, up until the Fed announcement this afternoon. 113.240. And then on both of these, look for a limit of 1 to 1.5 risk reward. And I'll do a little bit more explanation on these. So I'm not saying trade both of these. They're gonna correlate highly with one another. I'm just saying trade one or the other, whichever one executes first. And I can kind of go in here and explain this a little bit more here in just a second. So the strategy for today, nothing on commodity crosses, nothing on the yen. We can actually look for changes to that strategy. We're going to look for dollar Swiss or euro dollar. One of the reasons why we're staying away from the pound is, you know, the pound just has a kind of a mind of its own. If we're looking for something that's going to be dollar centric today, I think that you really need to look towards euro dollar, dollar Swiss. Pound, you know, like I said, has a mind of its own. Meaning there's, you know, it can sometimes go off in its own trends, if you will. You know, the correlations, you know, I even have a hard time figuring out what the correlations are with the pound. I'll write this out the correct way. So euro dollar, now let's talk a little bit more about what the strategy would be. Now we're looking for 1 to 1.5 risk reward heading into the meeting, but if you reach a 1 to 1 risk reward, if we can come up with if we can have a risk-free scenario on these trades, that would be ideal. Now, if we can capture the 1 to 1.5 before the Fed meeting, just take it. But if we can get into a risk-free scenario before the Fed meeting, that's where we would want to be. We'd want to be, my gut tells me that the Fed decision today will favor dollar strength because if they do open the door for a potential rate hike in June, especially with some of the dollar weakness that we've seen as of late, I think you'll see buyers come back into the dollar, and I think that at the very least you'll see a nice little, the initial limit, initial limit 1 to 1.5. If you reach that, here, let me do it this way so I can explain it. Take the profit and don't close out any, take your profit off the table. So, if you reach, you're going to put in the limit anyway at 1 to 1.5. So if you reach 1 to 1.5 risk reward, bam, take it off the table, and we won't have any trades during the Fed meeting. If we're at a point before the Fed meeting where we're, say, at a 1 to 1 risk reward, if we get to a 1 to 1 risk reward standpoint and we can move our stop to break even, so by 145, if I haven't reached 1 to 2, but or 1 to 1.5, and let's say I still have the trade open and I'm getting close to that level. We'll talk more about this at 145. But if I'm at just like a 1 to 1 risk reward, move your stop to break even. So if you reach a 1 to 1 risk reward, move stop and break even, and move limit to 1 to 2 risk reward. Now your stop should probably be at break even anyway, no matter where you're, once you reach a 1 to 1 risk reward, at least a 3-bar reversal before 145. But when we sign into class at 145, if it hits that initial 1 to 1.5 risk reward, bam, we got a profitable trade. We'll take it, and we'll just analyze the Fed announcement. But let's say we don't reach the 1 to 1.5 risk reward. Let's say at 145 we're at like a 1 to 1 risk reward and our stops at break even. I think in that case we have a risk-free trade, and if we're favoring dollar strength through the Fed announcement. Now this is where the rubber meets the road really when it comes to speculation, is the fact that I'm willing to speculate on dollar strength in the Fed announcement if I can have a risk-free trade on. Okay. So if I can have a risk-free trade on before the Fed announcement, then I'm more than willing to speculate that dollar strength is gonna rule the day post-Fed. If I can't have a risk-free trade on, I'm not going to go in and do our usual, hey, let's speculate on the dollar and risk 50 pips to make 50 pips. I'm not willing to risk anything during the Fed announcement. I'd only be willing to risk any money if I do have profitability built into the trade. Does that make sense, everybody? I don't know if I'm saying this the correct way. If I can get a nice risk reward trade done before the Fed meeting and get a 1 to 1.5, bam. Because we may see that as we head into the Fed meeting based on market expectations. If I don't get the 1 to 1.5, if I'm sitting there at a 1 to 1 risk reward and the Fed meeting is looming closer, then instead of 1 to 1.5, if I got that risk-free trade on, I'm going to look for more. I'll look for more because I'll have a risk-free trade. So, that's the one scenario that I see today that I really do like, because I really would like to speculate on the Fed announcement. I would love to have a risk-free trade on. You may say, well, why not just put the initial limit at a 1 to 2 risk reward? Because we need, if based on the week so far, we're kind of running a break-even week right now. So I would rather, if I can take a good trade off the table, for a nice risk-reward ratio, then I'd rather just take it off the table. If the Fed meeting looms large and gets closer, then, and I have a break-even trade on, that's when I'd be willing to look for higher reward potential. So it's essentially just us saying, if we get a good trade today before the announcement, bam, don't have to worry about trading the Fed announcement, that's fine. But if we're in a trade and the market does continue consolidating, we don't get a lot of movement in it, and we're at like a 1-to-1 risk reward standpoint, then either way we're going to be looking for a higher risk reward ratio. And then at 145, depending on where we're at on the trade, we'll decide at that point if we just have, if we're, let's say this dollar Swiss, we may not have any trades on. If we don't have any trades on, then we're not going to do anything. But if we have, let's say this executes on the Swiss or this executes on the euro, let's say we only have like 10 pips of profit in the trade or whatnot. We'll decide then on what we'll do with the trade at that point. If we just have maybe a small profit or a small loss in the trade. If we have a small loss in the trade, I can assure you we're probably going to close the trade out. But if we have a small profit on, maybe we'll just tighten everything up and just, still look for the same thing. It'll all just depend on where we're trading at that point. I think it is possible today, based on what I've read, that we may see dollar strength as we head into the Fed announcement. And that's really the only plausible scenario for today, because the only scenarios that I see, one of two scenarios, I see either sideways action, which would be market, that would be whipsaw action in the market, just sideways, nothing really moving as the market anticipates the Fed announcement. In that case, unless something shows that it wants to go up or wants, that it's breaking out, we don't want to mess with it. So if it's sideways, we'll just wait until after the Fed announcement, see if there's any potential opportunities and go from there. The only thing that we want to take today would be directional trades, and based on the consensus and based on what a large amount of market expectations are, I don't think you'd want to be trading dollar weakness. I think you'd want to be going into dollar strength. This is kind of the safe play. Now, Yellen's not going to cut rates. I think somebody said, what if Yellen cuts rates? There's never a 100% probability of anything, but I think that's I think it's like 99% probable that she's not going to cut rates. I don't think a rate cut is in our near future. And there's really nothing else that I like up until that point. So let's not chance anything by doing something stupid and just, keeping our trades open. Or opening, trades that don't make sense based on our view. You can see dollar Swiss is already starting to go positive, so that's good. But on those liquidity providers, you don't really trust them as much when something's not breaking out into a new level. This is what we call liquidity providers market. It's where they can really get, even out their bid and ask prices, buying and selling without worrying about underlying market movements. So that's why we always trust it more when it's actually breaking out into a new level, when we're seeing those types of imbalances occur. So for all you students, that is all. I mean, that's all I got. You know, just that one scenario. That's the only one I want to look at. We certainly do not want to go fishing today. We don't want to go fishing for trades. So that's where I shall wrap things up. So I'll go ahead and save this. Somebody asked, do you think the other probability could be a whipsaw on the dollar? Well, absolutely. Yeah, there could certainly be a probability of a whipsaw on the dollar. That's always a probability that, you know, with the markets are sideways and, you know, let's say it comes out kind of, let's say the Fed announcement is just kind of neutral or maybe just slight changes to the verbiage. You could absolutely probably see the dollar go, you know, whipsaw up and down. That's why we don't want to be in any type of position into the Fed announcement where we're risking any pips, unless we can get into a position where we have no risk, I wouldn't say no risk. There's always the possibility of volatile movements, but you know what I'm saying. You know, we want to be in a position where we're not putting any losses up on the table. If we can be in a situation where our loss scenario is just a break-even trade, then that's fine. But that is why they call us speculators. Market's just now open. Dow's down slightly. NASDAQ's lower based on Apple's results. So we're getting a little bit of a negative market open. You may not even see the markets go too crazy though today. Go ahead and close this out. And give you the handout. Looks like everybody got my NuriFX emails this morning, which is good. So it looks like there was a smooth transition. For once, there was a smooth transition. And that is not the one that I wanted to give you. That's from yesterday. And right after class, I'm going to send you another reminder with, if anybody would like to join me at 10:30, I'm going to be playing catch up and re-recording some tutorials. If you've been in all the tutorial classes, they're ones that you've already heard. Today I'm going to re-record, and I'm actually going to redo it a little bit, so we may only do one recording today, but the trading basics, which a lot of my students that have people that are interested in Forex, that trading basics is kind of an important one, so I want to get that recorded because that should have been like part 5 of our basic content. That should have been right near the top, and that's one where I kind of screwed up my verbiage anyway, and I never got around to editing the video because I screwed up during it, and if I posted it to YouTube, I would probably look like an idiot. So I'm redoing that one at 10:30, and we'll continue redoing them at 10:30 in the NuriFX classroom. So I'm going to go ahead and